I'm doing really good as well. It's interesting to say the least. But gosh, these financial markets have been phenomenal for
Mhm.
traders and investors this past year, and in this new year of 2021. But this past week we hit all time highs again.
Right.
Friday was a down day for a couple of the indexes, but there's been a lot of volatility brought from all these news events, these big events that are happening in the world. With some of those events that are kind of done right now, do we have anything to talk about?
Well, let's just talk about it. Let's look at that. Yeah, we had some really significant events that have had significant impacts on the market, which is a good thing for us. Volatility for us as traders is what we look forward to, and that's what we had last year. Can we count on that this year? Absolutely. You want to know what's coming up this week? Well, we've got some heavyweights that are announcing earnings: Apple, Facebook, Tesla. Those are potentially big movers. Over 118 companies are reporting earnings this week. What else? Well, the Fed meets. So we've got the FOMC meeting. We'll have an update on GDP. So a lot of things that have the potential to, again, put that volatility or keep that volatility in the market.
So maybe things are back to normal. We're talking about
Yeah.
earnings reports and FOMC meetings. That's a great thing. But you mentioned the word volatility.
Mhm.
A lot of people are afraid of volatility, and
Right.
when we talk about volatility, that's movement in the stock market. That's all that really means. But it's actually a phenomenal thing as a trader investor. So,
Correct.
quick recap how the markets really work in this first segment.
Well, you know what? We want to help people. We talk about financial illiteracy and how we want to, boost financial literacy. One of the ways we do that is to help break down a misunderstanding that people have about how the markets function. And one of those things is the fact that volatility for a trader is a good thing. And then we want to make sure that we educate based on what's factual. And one of the facts is that the majority of market activity is controlled by the big banks, what we call the smart money, the big Wall Street firms, the big hedge funds. Over 80% of the trades are controlled by those guys,
Yeah.
which means if you don't know what you're doing, well, if 80% is controlled by one group and they have to have somebody on the other side of their trades, who do you think that usually is? That's usually the public. So you want to make sure that you're not trading against them. We hear people say, well, if you can't beat them, join them. And that is the case. You can't beat these guys, but you can join them. And if they're controlling 80% of the activity, it means virtually every big move up or down on a price chart almost completely is determined by that smart money. And think about it, would they risk millions to billions of dollars every day without knowing that they have an edge? In other words, a probability to help them guarantee that they're successful? They can't.
Highly doubtful.
No, highly doubtful. They just can't. They can't gamble. They can't throw that kind of money at something without the confidence in knowing what they're doing. So where does their confidence come from? It's their edge. Their confidence comes from the edge that they have, and that's having the tools, the insight, the resources, the financial power to influence the markets and the price of individual assets and the market price. But you don't. I don't. Josh, you don't. And those of you that are listening, you don't. But you can, with the proper financial education, learn how to trade with them and not against them.
It's really how to identify potential points where they're entering and exiting the market.
Yeah, exactly. And why is that important? It's because when they enter or exit the market, they do that with such clout, such high volume that they can control the movement of price, the change in price. And that is where if you can get into or out of something at or near that turning point in price, that's the highest quality trade you can make. It gives you the lowest risk entry or exit. It gives you the highest probability of being successful with the highest profit potential. And those have to be two components that everybody would strive for with any investment or trade that they make.
Yeah, I'm really glad you brought that up because a lot of people think the public is moving these markets. I mean, 80 to 90% of the liquidity is done by the banks and the institutions. So we know that they are moving these markets. It takes them millions and billions of dollars. But the key thing was what their trading and investing strategy is they need an edge. And that's the retail investor as well. We need an edge to get into these financial markets. What is that edge? And it's the key is to trade like the smart money and not against them. And
our edge is following what they're doing.
Yeah, and you coming up next, I want to talk more about the smart money, how they are utilizing the stock market plus other markets to create income. This is Josh and Al, investing with confidence. We will be right back.